All right, guys. So another beautiful trading day in the markets. Another beautiful day, right? So today was a very simple trade, just like all my other trades, but this was actually way more simpler and easier to break down. There wasn't anything, when it comes to entries that were complicated, anything when it comes to structure. It was very, very easy, very right in your face. So this is probably gonna be the easiest breakdown. But if you have watched any of my videos, if then you'll know what type of strategy that I use. I use a very simple strategy, right? I'm only looking for three things, and I'll go over it right now. But these three things are very simple to find, very simple to look for, and to spot. So once you can master these three things, then you can become very consistent in the markets. Okay. So let's just get into it. So right here, as y'all guys know, the first thing that I look for is market structure. Okay. The second thing is supply and demand. And the last thing is an entry model. Okay. So that's the three things that I look for when it comes to my trading strategy. Before I even enter any trade, I have to understand or find something that matches with all three of these things. Okay. So number one, the first thing I look for is market structure. So from the 5 minute, even on the 15 minute is even more clear. But what do we have right here? We have a very clear what? Bearish market, right? So on the 15 and on the 5 minute, that's where I kind of go off of my bias. So on the 15 and the 5 minute. Now, right here, as you can see, the 15 minute is just so clearly bearish. So at this point, I already know what direction we're going in. So after I identify what structure we're in. So in this case, we're bearish, so we'll put bearish. And the next thing I want to do is I want to look for a valid supply or demand zone. But in this case, since the market is bearish, I'm looking for a supply zone. So that's exactly what I did. And what did I look at right here? So as you can see, this is the candlestick that caused this impulse move down. So this was it. This is the one that caused this whole impulse move down, causing that break of structure, that continuation to the downside. So this right here is going to be a valid supply zone. So we put supply. So now that I found now that I understand that we're bearish and I found a supply zone, a valid one, then now I know all I'm looking for is I'm waiting for a price to tap into this area and then look for an entry. Okay, because that's the final step. That's really the final step, and that's really it. Like as you can see, once price tapped into here, all I did was waited for an entry, but I took an entry off of the 1 minute. So I took an entry off of the 1 minute. So let's go right here. And I have videos on my entry models. You can go watch them. I have a whole bunch of videos. No, not even a whole bunch, but I have one video where I break everything down. So you can go watch that. But right here, the entry model that I took was a candle close entry. And this is a candle. Like the reason I like candle close entries is because you kind of already know what's coming, but you just wait for the candlestick to close to give you that extra confirmation, right? So right here, as you can see, we had this candlestick. It came up. We were still very bullish, right? Right here, we had this bullish candlestick, bullish candlestick, bullish candlestick, and then we were still bullish right here. But then once we tapped into here, we kind of closed a little bearish, just a little bit, but it wasn't enough confirmation for me to enter. So what I did was I waited for a candlestick. I waited for the next candlesticks to close. So I waited for this one to close, but still wasn't too convincing to me. So I just waited, and then once this one opened, it started this candlestick was like very bearish once it opened, and then once it closed, that's when I took the entry. So it closed right around here, and that's where I took this trade. I know you might say, bro, that was a little late, but I'm telling you, it's always better to wait a little bit longer and maybe not catch the whole trade and catch something than to try to be there early and get stopped out and then the trade leaves without you. You know what I'm saying? So that's something that I always go about. So right here, as you can see, that's where I took the trade right there when it closed, and then next candlestick dropped. It came up a little bit, and then it just ended up dropping, hitting my price target, and it was a very, very simple trade. It was a very, very simple trade. Yeah, I mean the entry model was a candlestick close, so we can put right here a CC because it was a candlestick close, so CC. So other than that, I mean that was basically all I needed to take this trade. Only three things that I needed, right? Bearish structure, I understood that already. Supply zone, a valid one, I already understood that as well. All I did was wait for price to tap into there, and then I just waited for the entry model. I just waited for a candle close entry model, and then after I saw that, I just executed the trade, and that was honestly that was it. That was all I did. That's all I looked for, right? There's no complications with there's no complicating my strategy with you know EMAs or volume or all these other indicators. It's literally just like this, and it's very simple. So that's why it makes it easier for me to make a decision. Because if I have a whole bunch of things that I need to look for before I even take action, before I even execute, then it's going to be way harder for me. And this is just what I use to execute trades. It's very simple, like I said. So I can even go over it again, like the same thing, right? Market structure is what? Bearish, right? So if the market structure is bearish, then guess what? I'm looking for puts. So now what I want to look for is I want to look for an entry. Are where is a high probability zone where there's a lot of sellers? It's going to be in the supply zone. So now all I do is look for a supply zone, right? Because I know there's a lot of sellers in here because last time we were in this area, we sold off before, right? We sold off a lot last time we were in this area. So I know there's a lot of sellers. So I know the sellers are in here. So you can see sellers are in here. So everybody is selling off right here. So we know if it comes into here again, there's a high likelihood that we're gonna sell off again. So once it taps in to there, then all I'm looking for is I'm not. And another thing is I'm not gonna enter right off the rip. I'm gonna wait for a confirmation, or I'm gonna wait for my entry model to look for one of my entry models right here. So in this case, if and the reason I don't enter like right off the rip or enter off of like just because we tap into a zone is because I know a lot of the times we can break. And there's times where this happens where it's a valid supply zone. It's just not, they don't always work. And that's the thing that I want to get into people's head, is that just because it's a valid supply zone doesn't mean it's going to work all the time. There's a high likelihood that it does, but it's not going to work every single time. So you have to understand those risks and then you have to take it. So in this case, as you can see right here, it tapped in and it dropped. So this actually did good. But there's times where this could just come up, come down, come down a little bit, and then reverse and then just break. So that's another thing you have to keep in mind too. So that's where entry models come in. But I mean, that was basically it. I mean, as you can see, it actually started selling off way more once it tapped into here. Let me see right here. Yeah, it tapped in way more once it tapped into here. It just started dropping like crazy. So we tapped in, boom. We just started selling off, selling off, selling off. And then this could have been like a re-entry. Like you could have entered off of this, just off of the re-entry, because it actually did end up selling. And like I said, that's basically it. It's not so difficult. I know people want to make it seem like, oh, it's so difficult. But if you follow this, if you get good at it, and if you're just patient, follow your rules, you will start to see like you will start to become consistent, right? Obviously, the more money you add in, the more you're risking and stuff like that. That's another game. But when it comes to just like understanding a strategy, this is a very simple strategy. And like I said, at first I was only trading AMD because I really liked AMD and I really like how it moved. But in this case, look at how AMD is looking. It's not the best structure. It's not like, if I'm being real, it's not looking the best, right? Right here, we just came up, we just dropped a little bit. It didn't really give us any good opportunities. So I would have wasted today not taking a trade, not gaining that experience because I was just waiting for one stock. But as you can see, SPY ended up doing pretty good. So that is one thing that I learned. But it's also not about forcing it. You have to also wait. And then right here, NVIDIA didn't do anything that crazy either. It's pretty, yeah, not doing much. And yeah, so SPY was the best one. So then I ended up taking it because the opportunity is there, then execute. You know what I'm saying? If you find these three things, there's no reason for you to execute, right? If you see market structures on your side, if you see supply zone matches with the structure, and then if you see an entry model that you like and then you want to take, then take it. You know what I'm saying? There's no reason for you not to do that. So that was basically today's trade. Very simple trade. Very simple trade. And that's really it. That's all I have to go over. And yeah, so if you enjoyed this video, you already know what to do. Like, comment, subscribe. Let me know what you guys think. But it's very simple. And yeah.